Hello everyone, welcome back to my channel. When people were buying Iraqi dinars from banks here in the United States, it wasn't uncommon to notice differences in the exchange rates from one bank to another. For example, one bank might charge a 1% fee, while another could charge 2%. This variation might seem small, but when dealing with currency exchanges, even a slight difference can affect the total amount you end up with. Let's dive into what this process looked like. At the time, many people were speculating on the value of the Iraqi dinar, hoping that it would appreciate significantly after Iraq stabilized and its economy recovered. As a result, there was a surge in interest from individuals wanting to purchase the dinar, and several banks across the United States began offering it as part of their foreign currency services. However, the exchange rate you got depended not only on the broader international value of the dinar, but also on the specific policies of each bank. Some banks added higher margins to the exchange rate to cover their own costs and make a profit from the transaction. For example, you might go to one bank and they'd tell you their fee for exchanging US dollars into Iraqi dinar is 1%. You might then visit another bank where they charge 2%. While that might not seem like a massive difference at first glance, when you're exchanging larger sums, those percentages can add up. The reality is that banks charge these fees to cover the costs associated with handling foreign currency, which includes not just the actual physical money, but the logistics of acquiring it from foreign financial institutions, the risks involved, and other operational expenses. Now, in my case, I purchased my dinar from an American bank, Chase Bank to be specific. I was curious about where exactly they got their Iraqi dinar from. After some discussion, I learned that Chase Bank sourced their dinar from none other than Bank of America. And here's where it gets even more interesting. That particular batch of dinar came directly from St. Louis. The idea of tracing currency back to its origin is fascinating because it highlights the complex web of financial institutions working together behind the scenes to fulfill customer needs. In this case, Chase Bank didn't have its own direct access to Iraqi dinar, but relied on Bank of America's foreign currency division to supply it. Bank of America likely had stronger connections or a more established system for acquiring dinars at the time, and that currency was stored in their vaults in St. Louis before being distributed to customers across the country. This means that even if you walked into a Chase Bank branch in another state, the dinars you purchased could still have originated from that St. Louis stockpile. This kind of behind-the-scenes financial network is something most of us don't think about when we're exchanging currency. We walk into a bank, request the foreign currency we need, and walk out with the bills in our hands. But what's happening behind the counter is a lot more complex. The banks have to deal with international supply chains, exchange rate fluctuations, and their own internal policies for managing foreign currency reserves. For those of us who invested in the dinar, the hope was that one day the currency would significantly increase in value and the small differences in exchange rates between banks would be worth it. Whether or not that happens remains to be seen, but it's a reminder of the intricacies involved in foreign currency exchange and how even a small decision, like which bank you choose, can impact your overall investment.